Everyone is freaking out about the tariffs as those tariffs were much higher than expected. The stock market is going down. People are fearful. Many different investors believe we might enter a recession or we might enter some kind of a major inflationary periods because of those tariffs. And I had so many investors ask me, what do you believe is the best way to bet on this? What do you believe is the best tariff stock? The best stocks that could benefit from higher inflation, the best stock that could benefit from all those changes in policies. And there's a lot of different stocks that people are talking about. A lot of people are talking about the gold mining stocks, as a lot of them are cheap. And if we have higher inflation, then gold is going to go even higher. That's a good idea. Some people talked about a lot of commodity stocks, a lot of oil stocks, a lot of agricultural stocks as a bet on US exports to other countries to try to balance out the trade deficit. So there's many different ways to bet on tariffs and to bet on the policies. But I personally believe I have the best idea. And I actually own it in my portfolio. And I didn't realize it was the best idea until a day or two ago. I was thinking about it. I'm like, this is the best stock to benefit from that stuff. This is the best stock. This stock is going to make a killing if we do have an increase in 20, 30, 40, 50% in prices. This stock is going to kill it. And I own the stock. I never thought about it this way. And this is an amazing company. And it might be obvious to a lot of you. A lot of you guys know the company, but maybe you haven't really thought about it as a stock that could potentially make a killing in this environment. And this stock is Visa. Visa stock is down almost 11% over the last 5 days. Now, many of you would say, why Visa? I think it's obvious, but almost most people use Visa or MasterCard. And Visa and MasterCard, they get a specific fee from the transaction. And this is a fixed percentage fee. So normally between 1.5% to 2.5% fee on every single transaction. Now, if the transaction value goes up 20, 30, or 40, or 50% because of the tariffs, then Visa and MasterCard will collect 20, 30, 40, 50% in more income without them having to increase the fees a single penny. If we have higher prices due to tariffs, those stocks are going to be massive beneficiaries. Now, many of you will tell me, yeah, but what about volumes? If we have a tough period, people are not going to be buying as much, which means, they're going to suffer in volumes. And that really hasn't happened in 2022. Many people believed in 2022 we were entering a tough period. We had higher interest rates, we had higher inflation, and people were calling for a recession. Yet Visa grew earnings per share 27%. That hasn't happened before. 2021, they also grew 17% when we had higher inflation, and that higher basket of prices kind of sustained itself into 2023, and they grew another 17%. So this is the ultimate stock to benefit from higher inflation. Yes, volumes could be lower, but a lot of the necessity items like groceries and many different things and many different products that come from China, the consumer is going to pay. If it's 20 or 30% more, they're going to pay. And they're likely going to use a Visa or a MasterCard, which means those stocks are amazing companies. They're selling off and they're indexed to inflation. So if you believe high inflation is coming, then Visa is the best stock to own. And Visa is still the leader in the industry. MasterCard is behind it. If you look at payment volume, as of 2023, 12.6 billion was made through Visa. MasterCard was 7.3 billion. Then you have American Express, Discovery, and a few others. But the main two are Visa and MasterCard. Now, despite the company being over $500 billion in market cap, they're still growing earnings per share 16%. This is extremely, extremely impressive from Visa. Payment volume for them, they're still expanding on debit, on credit, on everything else. It's been expanding quarter on quarter. And this is, again, amazing for a company like Visa. Now, they have the traditional revenues, which is services and fees and that stuff. It's around 8 to 9%. It's a slow grower. But they have something called other revenues, which I believe they kind of license out their data to other providers. I'm not sure exactly what it is. But their other revenues, they're up 32%. And they're massively, massively growing. And they're helping offset the lower growth in services revenues and data processing and fees and many different things. Now, the main thing with Visa and MasterCard, they really can't reinvest in themselves. I mean, they don't have to reinvest in themselves. This is a low capex, you could say duopoly business model, and they can't really acquire other companies because they're going to be called a monopoly. So they can't do acquisitions. They can't really do much with their free cash flow. So they return most of it to shareholders through buybacks and dividends. They have a tiny dividend, but they also have buybacks, and they buy back around 2% of the market cap every single year. And shares outstanding have gone a lot since 2013. And this is amazing for a company like Visa. Very high net income margins, over 56% net income margins. I mean, this is higher than Microsoft. I believe even higher than Nvidia and higher than most of your favorite tech stocks. 56% net income margin, very high return on capital, 36% return on capital, and it has been actually growing almost every single year, which is amazing. If we look at the PE ratio, the PE ratio right now is around 27 times earnings. Now, 27 times earnings is not cheap, but it's below the mean of 28 times. And I personally believe this it's not really bad over here, especially if you look at potential earnings growth, which will likely be 13%. This is really not bad at all. So if the multiple stays around 27 times earnings and you don't get a multiple expansion, you don't get a multiple contraction, your return will likely be very close to earnings per share of 12 to 13%. But if we had a massive increase in prices due to tariffs, then earnings growth could potentially, rival what they had in 2022 of 27%. So you could maybe see potentially 18 to 20% in earnings per share growth, and that would be much, much better for the company. So I believe this is kind of the best bet on that stuff, where they have no debt, almost very little debt. They have high return on invested capital, 56% net income margins, one of the widest moat you could have, amazing long-term investment, and then you're also kind of betting on the tariff situation. And I believe at $313, the stock is fairly valued. But I personally believe it's the best buy around 24 times earnings. So if it does get, for example, to 24 times earnings, this is where I personally bought it. I would be buying the stock like never before. I might even double my position. And I have a decent position in Visa. I might even double it at 24 times. 24 times would be around $270 per share, I believe. So if it gets to 270, and I don't believe this is impossible. I mean, 270 is not really far out. If we do get there, I might even double my position in Visa, as the market is selling off the stock because of tariffs, while this is a best bet on tariffs, the best bet on higher prices, because people, they're going to still have to buy a lot of those things, and they're going to use a Visa card or a MasterCard, and they're going to collect much higher revenues without them having to adjust their fees and nothing. They just sit and do nothing, and they collect 20 or 30% more. So this is my idea for the best tariff stock, or the best stocks that could benefit from this environment. If you want to learn more about what I do, what I'm buying, what I'm selling, I share everything in my own group. This is the link if you're interested. But thank you very much for watching. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I'll talk to you in another video.